A weak opening, 95 points lower. The sensex is down 320 points.
18,861. There's absolutely no one to pick up. 872 points down on the mid-cap index.
There has been some amount of semblance or some amount of recovery which has taken place from the day's lows.
What, no respite, right? No recovery, no respite, and the pace of the fall is very, very sharp, and I think that is what stands out.
The Nifty ending at the day's low below 18,850, taking its six-day cut to more than 1,000 points.
Hello and welcome to this special show, Market Sell-Off. I'm Sonia and here are all the top headlines for the day. The Sensex slid 900 points today as stocks fell for the sixth straight day. The Nifty has lost over 1,000 points in 6 sessions. This is the worst losing streak in the last 8 months. The broader market sees some recovery but still end with cuts. The mid-cap index falls over 1%, while the small-cap index sees cuts of 0.25%. Cement major ACC misses estimates in the second quarter, even as revenue rises 11%. Asian Paints reports a mixed bag. Profits and margins are in line, but the volume growth at 6% is disappointing. Company blames erratic monsoons and delayed festive season hurting demand. Canara Bank rallies after reporting a beat in the second quarter numbers. Sona BLW gains on strong revenue growth. However, Shriram Finance stumbles despite a good showing, and Westlife Foods falls close to 2% as revenue growth softens. And Honasa Consumer, which owns Mama Earth, sets a price band of 308 to 324 rupees a share ahead of its October 31st IPO. Clears the way to give returns anywhere between 8 to 108 times to its pre-IPO investors. The management says that the offline channels will drive Mama Earth's growth. Well, the Dalal Street saw red for the 6th straight day today. In fact, the markets posted its longest losing streak since February this year. The Nifty and the Sensex ended with cuts of close to 1.5%. 47 of the 50 Nifty stocks ended lower. However, the broader market staged a smart recovery. The mid-cap index ended a little over 1% lower, while the small-cap index fell 0.25%. The BSE companies erased market cap of nearly 3 lakh crore rupees. In fact, it was quite a negative session given that we have negative global cues as well. Large selling from FIIs is what we've seen, as well as the broader end of the market seeing a steep sell-off. Prashant is here with all the action. Prashant, over to you.
Well, another down day, but with a difference. The Nifty did not recover. We lost quite a bit once again. On your screen, the Nifty Bank, similar kind of picture, not really, no real big recovery. But the mid and the small cap indices did recover, and actually, especially the small cap index pulled back and almost, came back into the green at one point. I only say this half jokingly because I'm also half serious. The small cap index here in India has been one of the strongest indices in the world, and that some of that strength actually shone through. Top Nifty losers on your screen: Mahindra & Mahindra, the Bajaj Twins, Finserv and Finance, UPL, Asian Paints and Nestle were what lost the most. Now, we've been dropping non-stop for 6 sessions in a row, and the damage is on your screen. The Nifty, it adds up to a neat 1,000 points. In percentage terms, for the Nifty, that's 5%. For the Nifty Bank, it's about 5%. For the mid-cap index, it's about 7.5%. The small-cap index is down about 7% as well. Just to kind of not going into stocks, but the damage in the NSE 500 universe over the last 6 sessions, in numbers, only 21 out of 500 stocks actually in the 6-day period are higher. 25 stocks out of the 500 are down more than 15%, and 25% of the universe, that is 125 stocks, are down over 10%. Just a quick look at some supports and where they come in. This is the last congestion zone where the market spent time before breaking out. For the Nifty, it's pretty close by, 1.5–2% away, around the 18,700 level. The mid-cap index, it's some distance away. The small-cap index is the August lows, which comes in at about 11,500. The Bank Nifty is the weakest. It's already broken through these recent congestion zones. I want to end with a positive note because there were lots of pullbacks from the day's low as well. So look at some of these. Jindal saw 18% off the intraday lows. Adani Power, Apar Industries, BSE 13% off the lows. Prestige, Mazgaon Dock, Sonata Software, Sundaram Finance, Angel One, and many others as well. It's back to watching global markets. US yields back near 5%, which will be the dominating driver for that market and us as well when we come back tomorrow.
All right, Prashant, thanks a lot for that. Indeed, a very weak session of trade for the market. In fact, the market has very quickly moved from a buy-on dip to a sell-on rally situation, especially after the geopolitical tensions escalated in the last 1 week or so. Let's get you some market opinion now. Experts are still betting on the market in the long run. They believe that the outlook for the longer term remains positive. Take a look.
The fall got created with the excesses in the small and mid-cap space. And as the correction in that set in, I think it just happened to be a bit of a domino effect where, because FIs have been in any case sellers in the market, so we've had, with international cues being particularly unfavorable, a fair amount of overhang of that coming through. The fact that money will now come in, but come into large caps, is the way I see things moving forward. And if the market were to recover, which I think it will be led by the large stocks. The index movement will be large stock driven.
If markets become expensive, if money making becomes easy, then markets do give you a hiccup. They give you a speed breaker where the weak hands, they kind of sell out. They become nervous. The market remains in a long-term bullish trend. As I mentioned, 15% earnings growth. I don't see any other major market having that. And so markets remain in a bullish trend over the long term. Short-term hiccups are part of the game.
Well, to the second headline now, mid and small cap stocks staged a smart recovery. The mid cap index is 500 points off their lows. That index and the Nifty 500 hit their life highs on September 12, but since then have witnessed a steep fall. Vivek Iyer is joining in with some interesting data points on the kind of pressure that we saw and the broader market sell-off. Vivek, over to you.
Well, absolutely right. To put into perspective the kind of swift fall that especially the broader end of the markets have seen, we've actually gone ahead and seen three indices that encapsulate, what the mood is like, especially in the broader end of the market. So we've looked at the Nifty 500 index, we've looked at the Nifty mid-cap 100 index, as well as the Nifty small-cap 100 index. Now, the Nifty 500 index hit its lifetime high on September 12th. Since then, it's corrected more than 7%, but post-September 12th, 390 out of the total 500 stocks have actually given negative returns. In some cases, the cuts have been quite significant. Now, coming to the Nifty Mid-Cap 100 index, now this particular index too hit its lifetime high level on September 12th. Since then, the index is down over 9% and over 80 out of the total 100 stocks have given negative returns here. The Nifty Small Cap Index, the next one that we're talking about, hit its lifetime high on October 18th. Remember, the Small Cap Index did see an extended rally. Now, in this particular index, the sell-off has been even more significant. Over 95 stocks have actually seen a negative return since October 18, and the index has corrected 8% in such a short span of time. Now, coming to individual stocks, especially when you're talking about the Nifty 500 index, quite a few stocks have actually corrected more than 25%. So the Nifty 500 index, you're looking at names like Delta Corp, over 28% fall, since September 12, names like NMDC, Navin Fluorine, Usha Martin, JBM Auto, all of these stocks have seen corrections of over 20%. Now, coming to the Nifty Mid-Cap 100 Index, especially when we're talking about some of the names, in the railway space, IRFC has corrected over 19%. Back of weak results, some negative news flow for Biocon. Both these stocks down 18%. CG Power has corrected 17%. IGL, so much negative news flow surrounding the EV policy. Stock has corrected 16%. And lastly, coming to the Nifty Small Cap Index, the time frame has been very short. But despite that, some of the stocks have seen steep corrections. Triveni Turbine, HFCL, Data Patterns, MGL and Rights. All of these stocks have corrected well in excess of 10% each.
Okay, thanks a lot for that. Well, the third headline today, Asian Paints reported a lower than expected growth in volumes, with sales in value terms remaining flat in the second quarter. The revenue and EBITDA also missed street expectations. Mangalam is here with the key highlights. Mangalam, over to you.
But for Asian Paints, it was a soft top line that the company reported. In fact, the revenues were absolutely flat year on year, as against street expectations of a 5% growth, and volumes as well came in at 6%. The street was working with a number of 7 to 9 odd percent. With a flat revenue growth and a 6% volume growth, what stood out is that it means that lower priced products did well, so the realizations were lower, and at the same time the product mix would have become a little inferior as well. The margins and net profit, however, were largely in line with street expectations. The company said that there was erratic monsoon and delayed festive season that impacted overall demand. But what was good, like I said, the gross margins up nearly 765 basis points year on year, and the EBITDA meets street expectations despite a miss on the top line itself. We had a higher other income element, which led to the net profit being above estimates, or rather in line with estimates, despite a muted top line growth as well. The international business, a smaller part of their vertical, saw a decline of almost 4% in their revenues. The allied products, bath fittings as well as kitchen business also saw a decline of anywhere between 18 to 20% in their overall sales. Now, the most important thing, however, to watch out for Asian Paints going forward will be how the festive demand panned out in the third quarter, and secondly, what the competitive scenario of the industry looks like once Grasim comes into the fold.
Okay, thanks a lot for that, Mangalam. Well, moving on, ACC surged despite missing estimates in the second quarter. The company reported a revenue of over 4,400 crores versus an expectation of over 4,500 crores. However, ACC reported inline numbers on the net profit and volume front. Nigel is here with the key numbers. Nigel, over to you.
Well, that's right. ACC's numbers actually were a bit of a miss. On the top line itself, there was a miss of more than 100 crores. And the volumes were bang in line. So that's telling you that realizations compressed a little more than what the street was working with. A miss on the top line further percolated down to the EBITDA miss as well, though the profit number was bang in line. And I'll tell you why in just a bit. Now, costs were expected to cool off, and they did. So you had the employee costs, power and fuel costs, freight costs, as well as other expenditure. All of them on a year-on-year basis were a little bit lower. The profit number, though, was in line. How come? Because the other income did spike up to a great deal. And that's the reason why, despite having a miss on the operational performance, you had the PAT number that was bang in line. But the stock didn't see a big correction. Why is that? Because they've expanded capacity, and that's what's going to support the volume growth in the time to come. On a valuation-wise, it trades at around $100 per ton. For a cement capacity of that size, it's rather cheap in comparison to its peers. And the third factor is the cash in their books is up close to around 3,500 crores odd, which supports the valuations as well. All in all, a miss on the numbers, but the street seems to be building up hopes in the time to come, because volume growth will pick up and cooler cost as well will help them in terms of profitability.
Okay, thanks a lot for that, Nigel. Well, on to some important news. Financial influencers are under the SEBI radar again with the latest order against Mohammad Nasiruddin Ansari, also known as BAP of Chart. SEBI has barred Ansari from accessing the securities market till further notice and penalized him for offering unregistered investment advice under the garb of investor education. So why has this action been taken against Ansari? Shivani Bazaz explains.
Well, according to SEBI examination, Mohammad Nasiruddin Ansari, also known as BAP of Chart, was giving stock recommendations through his social media platforms with the promise of guaranteed returns without a proper SEBI registration. All this was being done under the garb of educational training through his market courses. Apart from the monetary penalty, the notices in the matter, including Mohammad Nasiruddin Ansari, P. Rahul Rao and Golden Syndicate Ventures, have been barred from accessing the securities market until further notice. SEBI also found that Ansari was selling a total of 19 courses relating to the securities market, including 4 that promised investors assured returns. Some of the courses were advertised as sure short way of recovering all losses with a 99% guarantee. One course was also called MSP, Make Sure Short Profit, among others. Now sample some of the promises made if you buy these courses. You can make consistent profit. You can make money in all types of market. Bank Nifty Shaktiman strategy promises a chance to earn 200 to 300% profit. The SEBI investigation also found that Ansari provided buy-sell recommendations on his private groups on platforms like Telegram. These courses reached a wide audience through Ansari's big social media following. Ansari's YouTube channel has more than 4.43 lakh subscribers and more than 7 crore views. Here's the bottom line. The SEBI investigation found that Ansari has lost nearly 3 crore rupees from his own trading account in the period he was investigated. At the same time, he collected more than 17 crore rupees by selling courses which made promises like 5 minutes mein sure short profit.
Okay, thanks a lot for that. Well, let's take a short break. On the other side of the break, we'll have the other headlines. So do stay tuned in. Welcome back to Markets Today on CNBC-TV18. Well, the fourth headline today, Canara Bank gained on the back of its good second quarter earnings. The bank's net interest income and profits came in above street estimates. Abhishek is here to give us a fine print. Abhishek, over to you.
Well, Canara Bank came out with its results and the ROA crossed 1% level for the first time in last 10 years or even more. So they have beaten our poll in terms of P&L performance. The NI beat is about 2% and the PAT beat is about 3.7%. Asset quality, one of the best in last 8 years. Gross NPA ratio is at 32 quarter low. Net NPA ratio is at 33 quarter low. Slippages have declined by 12.9% quarter on quarter in absolute value, and the annualized slippage ratio is at 11 quarter low of just 1.29% when compared to 1.54% in the previous quarter. Quarterly ROA for the first time in last 10 years or even more has crossed the 1% mark. It's at 1.02% when compared to 0.79% YOY and about 0.99% in the previous quarter. Business momentum has been strong on a sequential basis. The deposit growth of 3.33% quarter on quarter is the best that you are seeing in last 6 quarters, and the reported advances growth of about 4.35% quarter on quarter is the best in last 4 quarters. Net interest margin decline has been captured and it is not much, just 3 basis points on a sequential basis. They have reported a net interest margin of 3.02% when compared to 3.05% in the previous quarter. Back to you.
All right, thanks a lot for that. Abhishek, stay on. Shriram Finance was under pressure despite reporting a sequential increase in the net income and operating profit. The asset quality has also improved as compared to the same quarter last fiscal. Abhishek, give us the key highlights.
Well, Shriram Finance saw improvement in asset quality and strong top-line growth as well. The net income is up 19.4% YOY and about 10.2% quarter-on-quarter. Net income includes net interest income as well as other income. The operating profit growth was pretty strong at 16.3% YOY and about 11.3% quarter-on-quarter. However, on the flip side, the provisions disappointed as it increased by 25.7% YOY and about 28.5% sequentially. Despite the fact that asset quality has improved, gross NPA ratio is down by 24 basis points, net NPA ratio is down by 16 basis points on a sequential basis. The PAT was healthy on a sequential basis. YOY the growth was 12.6% on PAT, while the sequential growth was 4.5%. We are working with a number of 1,747 crore on the poll with respect to PAT, and it has come in at 1,751 crores. Back to you.
Okay, thanks a lot, Abhishek, for that. Well, moving on, Westlife Foods slipped over 2.5% after revenue growth softened in the second quarter. The company saw lower profits due to higher depreciation and lower other income. Mangalam is here with the key numbers. Mangalam, over to you.
Weakness in consumer sentiment continued for the QSR space. We heard Jubilant Foodworks reporting, a 1% decline in their like-for-like growth. It turns out Westlife Development also, the burgers, saw revenue softening. In fact, the same-store sales growth were up just around 1% odd. The operating margins were impacted by royalty and annual store payroll hikes, and the net profit was lower on account of higher depreciation and lower other income as well. 7.5% top line is what the company reported in terms of growth. EBITDA margins actually declined from 16.8% to 16% as the EBITDA grew by just around 2.5% odd, and the net profit fell by nearly 30% on account of higher depreciation, which is a non-cash expense, and lower other income as well. The company added 9 new stores during the quarter, taking it up to around 370, and they're of course targeting 45 to 50 new McDonald's stores being opened in this year itself, and overall taking the count to almost 580 to 630 in the next couple of years by FY27. The stock saw a bit of sell-off post these numbers.
All right, thanks a lot, Mangalam, for that. Well, the fifth headline today, Honasa Consumer, which owns brands like Mama Earth, Aqualogica and Dermaco, has set a price band of 308 to 324 rupees a share ahead of its October 31st IPO. It has cleared the way to give returns of anywhere between 8 to 108 times to its pre-IPO investors. Among the selling shareholders in Mama Earth's IPO are prominent funds such as Evolvence India, Fireside Ventures, Sofina and Stellaris. Actors Shilpa Shetty Kunjra and entrepreneur Kunal Baal are among the selling individuals as well. Take a look.
3 of them are now more than 100 crores, right? In just the last 3 years' time, in a space where you have not seen even larger companies being able to create such sizable brands in such short period of time, right, does talk about our capabilities as an organization. The desire and dream, right, is to make sure that we continue to deliver better growths than the market, right? And continue to gain share. And so I think the aim will be to make sure that we outgrow the market and we continue to delight our consumers, right, by offering products that they really love.
Okay, with that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.